I would reframe it in terms of like, what is the driving force of the internet over the next 5 to 10 years? With OpenAI with 1 billion users, like that is the driving force of the internet and its adoption, and like all the data center capex, all the energy stuff, like that can come on chain, but it's going to be downstream of these like, new waves of growth within the internet itself.
This episode is brought to you by Arkham. Arkham allows crypto traders and investors to look inside the wallets of the best traders, largest funds, and most influential players in the crypto markets today. We'll hear more about Arkham later in today's episode. Quick shout out to Permissionless 4 coming this summer to New York, June 24th through June 26th. We'll have speakers from all across the industry, including Hayden Adams, Kyle Samani, Guy Young, and more. Get your tickets today by following the link in today's show notes, and make sure to use code BELL10 to save 10% on your purchase. See you there. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another Roundup edition of Bell Curve. You got Michaels 1 and 2, Vance. Bells, how we doing?
Good.
Good. Yeah.
Good. Up and down.
Staying alive. Hey, I know we talked about it last week. What do you guys think of that Jony Ive, Sam Altman little bromance video? The little coffee shop in SF?
A little meet cute. I thought David Sachs had the funniest take where he said that Jony Ive was a media creation. It's like
I heard that. That's
1,000
hilarious.
IQ take, and I think it also is somewhat correct. I mean, there is like these intimations that Jony Ive, stole the designs of the iMac and the iPhone from a German industrial designer. The photos do look pretty much the same, so I don't know if there's like, some or all truth to that, but I think what Jony Ive has proven himself capable of is becoming great friends with Sam, and that is maybe the most valuable thing of all.
I also, I mean, look, this will be the first time that he produces a mass market physical product that doesn't have an Apple logo on it. There's been other attempts from Love Design, and they've incubated a couple of companies, actually, some like camera stuff and some physical hardware. It'll be interesting to see what they put out. And everybody's been like pontificating on what the form factor will be. Is it headphones? Is it a wearable? Is it something you put on your desk and like records everything? Like this will be kind of, in my mind, the test of whether or not it was Jony steering the ship or Jony, aboard the ship as it was taking off with iMac, iPhone, iPod, everything. But he is the guy that was the designer of every physical product at Apple, basically from 1998 until he left, I think in 2014 or 2015. Big deal, I would say. Whether or not he was the actual designer or like great artist, copy, or good artist copy, great artist steal, whatever that threshold is, I'm not sure. But there is a lot of like, at least what I know. So we have friends that work at Apple, have worked at Apple. I spent a summer at Apple. Like there's some understanding of the industrial design group is basically the ones who like make the product. And at every other physical hardware company, it's sort of like, here's all the specs and all the things we need to put in it. Industrial design group, go figure out how to box this up. Whereas it's the opposite at Apple. It's like, here's how big it is. Here's the maximum thickness, or here's how it's going to work. Here's the form factor, all of that. And like, go figure out how to put all the stuff that we need to make it work inside of that box. And so the product development process is pretty different at Apple. And I would definitely give, Jony some credit to making that happen. He definitely had the buy-in from Steve when Steve was alive. But this will be a good test.
Yeah, I think not, without any facetiousness, I do think the ad was very cool. It showcased San Francisco. It kind of cemented its place in terms of like, this is where the future happens. I think the New York scene is kind of like, I don't know, there needs to be a really large outcome out of there for that to be like even close to SF. But if the OpenAI IPO is the largest IPO in US history and Anthropic is not far behind and all the robotic stuff is kind of behind that, it's like, there's so much wealth that's going to be created in the city. And, Jony Ive making $6.5 billion on like a Tuesday, it's like, it's so emblematic of that. And I mean, like, yeah, like obviously like Jony Ive did the design of the iPhone and the iMac. Doesn't matter where he got the designs from. But you know, it's like people are making money here hand over fist, and it's not real money yet. It's like kind of this like funny money abstraction. But at some point that will become real. And you know, like if the largest IPO in US history happens, SF is going to be like, I don't know why anybody would live anywhere else other than like Miami. If you're purely optimizing for taxes, probably like the ticket to the future is kind of the other thing that young people should optimize for.
Well, the previous largest IPO in U.S. history was Facebook in 2012, and that was right.
And I think that was in U.S. history, couldn't have been because it was tiny IPO, right?
It was $100 billion.
Well, bullish.
You know who's been I've seen get some shouts recently is Tony Fadell. I think he was the designer of the iPod, and there's a great documentary about General Magic in the early days. Very like scratching at what would eventually become the iPhone, just way too early.
What's also kind of interesting with Sam, at least, is like Elon has moved to Texas, and I think that's like viscerally felt in a lot of ways that aren't like kind of obvious just from the outside looking in, but like this is kind of Sam City right now. And like, you know, it's like the Texas stuff and, you know, whatever, Cowboys and whatever. It's like, that's great, but like this is the city where it's happening and Sam has control over it. Like I think Elon has made like a big mistake leaving, and I think I could see him coming back at some point.
Yeah.
Then the question, it begs the question, who is that person for New York?
I mean, the rank.
I mean,
guy.
it's always been kind of finance, right? I don't know if there is one guy who controls it at any one point, but it's always like the hedge fund guys like Jamie Dimon. It's those sorts of characters.
You'd almost make an argument, and this is maybe too far afield, but like Adam Newman at his Pedro top was one of those. And there are definitely a cast of characters over time, but you don't have something, you know, of the gargantuan size of, you know, Mark in 2012 with the Facebook IPO, and remember he hit the button from Menlo Park. He was like, I'm not going to New York. I'm doing it from Menlo Park. You've got, you know, now Sam at least 350 billion on paper, and
Dario is like a fifth of that. Like there's multiple, you know, like power law winners in San Francisco, and there's like zero in New York, even if like Ramp goes public at 12 billion or whatever its valuation is. And there's a lot more unicorns kind of in the chamber that are waiting to go public. So if you're a young person today, you should either get extremely wealthy and move to Miami, or you should be in San Francisco. I think like the LA, New York, it's just getting harder and harder to justify as like anything but like an in-between place.
Arkham was created to make blockchains human readable and simplify blockchain data so that it is meaningful and useful to the average crypto user. With their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. To get started, follow the link in the show notes below. This episode is brought to you by Marinade. Marinade is a high-performance staking delegation platform that brings both liquidity and security to the Solana network by connecting SOL holders with the best staking rates on Solana. Follow the link in today's show notes to learn more. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research. Well, New York's still good for crypto for the most part. I feel like the AI is driving the renaissance back in SF, which it feels like it's just straight up fully back. But there's still... Well, I'm not sure what you guys feel about this, but it does feel like there's been a real draw of crypto people, especially from abroad, coming back from Lisbon or Dubai or wherever you might have been, Europe or Middle East. But it doesn't feel like the regulation has moved quite yet. I mean, obviously it hasn't gotten fully passed yet. And so, yeah, just kind of poking around some of the more institutional players in the space, the infrastructure guys. It's kind of like, yeah, we're opening an office and investing, but it hasn't really moved yet. Is the general sentiment.
I think so totally agree with that. And it seems like from the people that we have talked with who are moving back, you know, who maybe moved out or are thinking of coming to the United States, it's sort of like San Francisco and New York are the two only viable destinations for crypto founders. And the segmentation is sort of like, are you doing something finance related? If so, like having proximity to the finance industry is important. New York, takes that. But if you're building infrastructure or anything AI, it's probably better and more beneficial to be in San Francisco because you have the engineering base and you have obviously all the AI customers here. So that's how I would describe the crypto segmentation. And but real world assets or anything financial related, New York.
Yeah, I think I would reframe it in terms of like, what is the driving force of the internet over the next 5 to 10 years? With OpenAI with 1 billion users, like that is the driving force of the internet and its adoption, and like all the data center capex, all the energy stuff, like that can come on chain, but it's going to be downstream of these new waves of growth within the internet itself. And so it's like, if AI is driving the internet, crypto is downstream of AI. And in that lens, it could make sense to be in New York, but it probably does make, on a certain time scale, more sense to be closer to where the tailwinds are emanating from.
Let me ask you, maybe knitting some of these different topics together. Then I want to get into these treasury vehicles that we're seeing in crypto and get your guys' take there. But the general magic thing, what that reminds, that was basically the iPhone before the iPhone. It was just too early. And I've been going back to some of these 2017, 2018 ICO ideas and wondering maybe some of these were just too early and we didn't have the infrastructure in place, and some of these weren't bad ideas. They were just too early. One of those that consistently captured people's attention was kind of the Filecoin Arweave idea of storing data. And I'm wondering if that combines with AI in an interesting way. And this is like an open-ended question to you guys about that makes a lot, because I'm talking to ChatGPT a lot. I've actually sometimes stopped listening to podcasts and I just have conversations with ChatGPT when I'm like walking to pick up groceries. Yes. I'm starting to tell it some personal shit, and because it's helpful, it's useful. It's like really good advice.
The equivalent is like when people were oversharing at the start of social media, where it was like, you really want those pictures online forever?
Yeah.
You really want that question in the hands of OpenAI forever?
It feels like a fit for crypto in some sense, right?
Yeah. Maybe? Yes. The platform is called Space and Time and Disclosure. We are investors.
Okay.
I think that
we should get Scott on here at some point.
Yeah, totally. He would be the best person to literally talk about this, the intersection of data technology and AI, and how blockchains will be able to not only provide verifiable understanding that is like ZK TLS secure, but also being able to store it on chain in a database that isn't owned, by people who are taking over the world. And I think that there's a lot of value in that in general. But yeah, I literally have been having this thought as like thinking about where we are in the arc of consumer adoption and sort of like where AI will be. And there's Ben Thompson is this kind of he writes a blog post called Stratechery, and over the years he's kind of put out these frameworks of how you think about tech adoption or different platforms. And one thing that he always talks about is the ability to understand kind of like where we are in the arc of consumer adoption of these different new tech platforms. And basically the consumer adoption waves have been PC in 90s, 80s, 90s. Then you had the internet, and then you had mobile, and now AI. Some people they used to say, okay, well, SaaS is going to be, like SaaS is an enterprise technology. Just like I think, at least as it currently stands, and we'll see if I eat my words in years from now, blockchains are not a consumer application technology. They are an enterprise application technology. And what I think AI will provide, especially as we're seeing with ChatGPT adoption, is that you're going to have new consumer applications that are built on top of AI be the next wave of how consumer appeal, basically like what's the iPhone moment, what's the Uber moment, all of those things from the mobile revolution are going to happen via AI. And as more people get onboarded, there's just going to be so much information that is stored that everybody is asking questions about. And I saw some really interesting analysis. Actually, I think Sam said this on stage. He said the what is it? We're millennials, whatever. The older generation above us looks at ChatGPT as a Google search bar. We look at, our generation looks at ChatGPT as basically like a on-demand, like Wikipedia or on-demand like therapist, or basically someone to converse with, as you're describing, Mike. And like the younger generation below us looks at ChatGPT as their like 24/7 assistant, or like the person who's doing all the work for them, and they set up
friend.
Friend, exactly. And it's just like the perception of what this tool becomes changes one generation to the next. But yeah, there's the downstream ramifications of all of that are going to be pretty fundamental from a data perspective, but also a privacy perspective.
And I'm probably more open to consumer happening on chain, or like, broadly defining what consumer is on chain. Like, are the 5 million people that are slinging meme coins on, Pump Fun, is that consumer? It depends. And consumer moments, like, it's oftentimes like an overnight success that was like years in the making. And so like, if that growth rate compounds and it gets to 100 million people, like, I guess you can call that consumer. I do think kind of one thing that I noticed with Coinbase Wallet, just playing around with it, is they've really taken a bet on consumer being what people want. And like, you open the Coinbase Wallet now, if you've ever played with it, and like, it's like a direct Farcaster feed, and like, it's kind of all the bells and whistles that come with like a typical news feed. And it's just like a bet that that's what people want. I'm not sure about that versus like what's happening on, like Pump Fun is the consumer nature. Like Farcaster is very different than like the speculative, like kind of quasi consumer use case. It's more so like Twitter on blockchain. And I would say I'm probably less bullish on that, and kind of like the Farcaster ecosystem. I like, maybe it works in the fullness of time, but I think it's a bad bet for now.
It's not a consumer platform until it is. I agree, but there's basically no evidence to suggest that it has consumer adoption curve metrics at this point. Speculation is potentially the only thing that you can put in the consumer adoption camp, but that's not like a single app or a single platform. That's just more of like the nature of the asset.
Yeah, I agree with Vance, your take there. I think here, I actually, just by way of actually putting some numbers around this, I actually did a thread earlier this week, but just tried to find it and can't. But basically, if you look at all of the revenue which is being generated by apps on chain today, that's something like in the last quarter, 2.1 billion. But if you were to look at the amount of that's being generated basically by trading, that's like 1.5 billion of that. Oh, and I'll include wallets because that's also just trading as well. So it's 1.7. So it's like the vast amount of what people are paying for is still trading on chain today.
Yeah.
So
keep in mind, there's basically two types of consumer apps. There's free to use and content based, where you're paying a service fee. And free to use monetizes based on advertising. Advertising can only work if you have massive scale. We've talked about this with like chat being a subscale advertiser. There's nothing that reaches advertising scale at this point on chain, like period, full stop. And if you have a subscription service, if you're paying for Netflix, if you're paying for ChatGPT, like those are consumer apps, but you're paying for content. And that's kind of how you have to look at the lens of what the consumer appeal is. What is it that people are willing to pay for on chain right now as a service, or like as a content subscription? I don't think there's really anything. And maybe it's just the payment of subscription is the speculation on meme coins, and maybe it's entertainment. Like you can kind of like end around into that argument. But this is how, like, at least I break down the consumer world.
Yeah, it's like it also feels like there's kind of like this war in Coinbase right now, where half of the company is kind of like Jesse pilled and like wants to just coin it and do Farcaster as the wallet and kind of like just aggressively push consumer. I think there's actual tangible risks to that, because like a lot of these like just coin it ephemeral coins like go up in a straight line and then go down, and like you just torch those people forever from any other understanding of crypto. And then I think there's kind of another team in Coinbase, which is just like, just list the DeFi coins, just list things with fundamentals, just list things that are backed by reputable investors. And like, I think there's also some truth to that. I do think it's just weird because like the amount of people that we're torching with tokens that are broken, and Felipe from Thea did a good talk on this, I think last week.
Yeah,
there's a video of it on the internet if people want to watch it, but
I'll link it. It's from research today.
Definitely link it. But like, the more we lean into consumer as the paradigm before it's ready, it feels like the more people we're going to torch and confuse. That's at least my perspective. Not saying that consumer won't ever happen. I'm again, more positive on it than probably Michael, but there's just a lot of stuff that needs to happen first. Like, I think we will get there in time, but like, it's not tomorrow, and telling people it is not helpful.
Yeah, there's definitely, I mean, it's tough. There's such a repeated behavior around this. I mean, this is the famous quote around, the future is here, it just looks like a toy today. I think that's the Paul Graham quote.
Right.
And this habit of people wanting to speculate on things like meme coins, I'd still put NFTs in this bucket. It's so persistent in crypto, it's just hard for at least me to ignore. Because I think you look at this and you say, this is a perversion of finance, this is a waste of time, this is people punting, but it's so persistent in crypto specifically. And I do see, I think I get what I don't want to put words in Jesse's mouth, but a lot of people are approaching this from the perspective of trading and financial assets. I don't have to squint too hard to see. I can see a media, looking at this through a media lens, I think there's legs here. But yeah, I don't think we figured out the form factor. And I think that's going to take some time. And unfortunately, unlike in other form factors, when you're trying to figure that out with a consumer app, people will lose money along the way. So you have to be a little bit sensitive. I don't really know what the right balance is, to be honest.
The thing that's different with most consumer apps is that there's no risk. Speculation isn't, native to the experience. Here it is. And I mean, companies are obviously like a reflection of the people that are inside them. And you can just like feel this viscerally playing out. And then kind of on the other side, and maybe we can talk about Hyperliquid, but like Jeff does one podcast a month. The product is the product. He's shipping more of the product. It is the same product. There's like a very concentrated but very loyal group of users. Like maybe that is kind of a better frame.
Hyperliquid is dominant. By the way, I mean, in terms of what they've been able to put up with volume and revenue, like, yeah, it's pretty stunning. Yeah, it's pretty stunning. All right, let's talk about Hyperliquid here for a little bit, because I think there were a couple. So Jeff came on the podcast a couple of weeks ago. I think, he's done something. He's making a play at an L1, and he's building it in reverse order, as opposed to, Ethereum and Solana started with the general purpose smart contract platform. He's starting with the killer app, which is the Perps DEX, and then building up an L1 around it. And so far he's been, I'll pull up some charts we can look at, but been really, really dominant in that space, is absolutely trouncing all the other DEXs out there. And it seems like the ambition is to be on-chain Binance or on-chain Coinbase and to compete with the big dogs, the centralized exchanges.
I would actually say it's even bigger than that. I'd say the goal is to be, have an app that does the same. And right now, like the amount, I think, of open interest is like 25%, or maybe it hit 25%, maybe it's back down, of Binance. Some days it's doing more volume than Binance. Like it already is it is decentralized Binance, but that's an application. I think that the goal is to say, this is something akin to Ethereum or Solana as an L1, where many apps and many app builders are building with an application at the core, which is doing the same volume as Binance. Because also remember, Binance tried to do the same thing with BNB and BNB Chain. And it was, at least for a while, in mostly the 2021 era, it was sort of like where is geographically located teams in Asia were building, and there was a lot more kind of speculation, and it was DeFi summer, so it was a hard comp to compare it to today. But there was a period of time where it was like BNB Chain is going to be the place where you launch if you want, Asian users. Things have changed a bit since, but they tried to be an L1 as well. It is not necessarily a very easy path to start one way and expand other ways. Like, Solana obviously started as an L1 and has been building applications core to Solana ever since. Similar path as Ethereum, but it'll be interesting to see if they can get there. But and I think it's looking promising so far. But the goal is to become Solana and Ethereum with an application the size of Binance on top.
Yep. And I think the fees being so robust, and we were trying to do the math the other day. I don't know if we ever actually like fully finished this exercise, but Hyperliquid has like 2 million, 3 million of buybacks a day. And, that's kind of like all the revenue, and that converts directly into that. I think Solana is basically like, what did we end up kind of calling it?
It was hard to compare and contrast because a lot of it goes to the stakers versus actual buyback and burn. But it was something akin to a couple $100,000 as the equivalent.
Yeah, I think like our perspective just on like observing the chain is like Hyperliquid probably has, anywhere from like 5 to 10x as much fees that go to the kind of end user stakeholders in terms of a buyback. And that's kind of without the Hyper EVM, and a lot of the builder codes that have been shipped recently are pretty interesting in the sense that like, if you buy a ticker, you own 50% of the spot market fees, and that will only kind of increase that. And so like, we did a lot of stuff in Solana kind of like in 2022 and 2023, but like we didn't buy nearly enough SOL. And like watching that asset go up in a straight line was like excruciating. And it kind of feels like that same thing is happening with Hyperliquid, where there's a lot of people who, obviously there was no VC rounds. Obviously like the dip, whenever that happened, was pretty shallow. But like you can kind of feel the same thing happening, and you can tell by just like there's people. I think I don't think shitting on ETH is fashionable at this point, but like calling the top on Hyperliquid certainly seems to be. And it's just that same feeling of like, oh, like, will this please just go away, or will this please just like fuck off and stop existing? And I think what we've learned over time is like if you're ever upset about a coin, you should just buy a bunch of it and then see how you feel, because there is this kind of ownership mentality where you're like, okay, well, it's not that great, and it's probably not that bad, and maybe I'll buy more. But just being on the outside looking in is really tough. And I think just like judging by CT, like the race seems to be like Hyperliquid flipping SOL. And it'll be interesting to see if that plays out. And the cap table is obviously a lot different. So I don't think like, the 40% or whatever that goes to the team and the 20% that's allocated to grants, like that's not going to be float in the same way that Solana has. So I think it could be like a real horse race. And, Hyperliquid probably gets pretty close to Solana's total market cap at some point based on the fees that they generate.
Yeah. And by the way, even in the last couple of weeks, Hyperliquid has really pulled ahead in terms of what it's doing revenue-wise. So this is app revenue, and I'm just mostly looking at different exchanges here. Uniswap's not included here because technically it doesn't generate revenue. Otherwise, it would be roughly within this ballpark. But I mean, you can see they started to compete going back to October, like December of last year is when they started to take a meaningful share. And now, just even within the last week, they're doing roughly twice what Pump is doing. So super impressive numbers from Hyperliquid. And, you can tell when speaking to Jeff, that he approached this from, his background is Hudson River trading. And I think he was frustrated with some of the offshore exchanges that I think he was forced to trade on in the early days. And there are a couple of threads that you can go back and look at him going back and forth with the CEO of BetGet, that type of stuff around, their ordering and placement policies and stuff like that. And yeah, it's, kind of the story of great founders is they're sitting around waiting for someone to fix the problem that they see, and then no one does it. And so they just do it. So
it's like, I think going back to that chart you just showed, like that is definitely the app to app comparison, but like to our earlier discussion, like Hyperliquid is an L1. And so like, I think the real comparison is like, basically like, fees paid to SOL validators from transactions versus whatever Hyperliquid's doing. And I think the numbers that we got from DeFi Llama, at least, and I think people know that at least I've had my issues with.
I was going to say, the carousel of correct numbers.
Is it better to have no numbers or incorrect numbers? It's like, I really don't know. But like, the chain revenue, which is defined as the subset of the fees that the chain collects for itself, is 149,000. The chain REV, which I think is kind of like what you just showed, is 2.8 million. But like the chain revenue is the fees, and it's like 150 grand of Solana fees versus $2 million of Hyperliquid fees. So like we're almost like 10 to 15x higher on Hyperliquid, and all of that goes into a buyback for Hyperliquid versus, you know, the fees on Sol go to the validators, which, like, I think you can argue like that may actually be the same thing. But you know, there is like this situational awareness thing where like this stuff happens and it happens so fast, and then like it takes you time to actually grok it. And like obviously the OI has gone up a lot, but like whenever the Trump tariff tantrum stuff happened, it was kind of like when we first really understood this. And I think the only path forward, if this continues, is that more people realize it.
I think there's also a dynamic as well. Imagine if you're a liquid fund and you've been, I mean, I'm not 100% sure that everyone's benchmarked this, but Bitcoin has been trouncing everything, right? So it's been really tough to be, especially like a liquid only fund over the course of the last couple of years. And so one dynamic as well is they're kind of like, okay, what can I buy here? What can I own? And when you have a story that's as powerful as Hyperliquid, you have a sense that, all right, there's all these buybacks and like real revenue and real adoption happening. Plus there's kind of a, you know, that all the other liquid funds are in the same position as you, and we got to buy something that outperforms Bitcoin here. I mean, Hyperliquid looks like a pretty fast horse at this point too. And it's, you know, yeah, depending on where you know, how you're comping it to an L1 versus an exchange. Over the years, we have seen a multitude of hacks, rugs, and bundled launches. The number one way that crypto traders can protect themselves and the wider community is through on-chain analysis, knowing who is moving funds and where those funds are going. Paired with their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. Arkham's exchange provides traders with the tooling and liquidity to take action in crypto markets based upon their on-chain observations, bringing them the world's first exchange powered by crypto intelligence. To get started, follow the link in the show notes below. Hey everyone, quick shout out to today's sponsor, Marinade. Since launching in 2021, Marinade has expanded their suite of products to provide solutions for both DeFi users and TradFi, including liquid and native staking, as well as direct enterprise integrations. Marinade's platform is optimized for institutions to securely expand their exposure to Solana. Whether through the provisioning of custodial or non-custodial yield, integrating staking rewards into Solana financial products, or leveraging Marinade's best-in-market rewards rate for revenue and treasury management. Whether you're in DeFi, TradFi, or somewhere in between, Marinade has something for you. To learn more about Marinade, follow the link in today's show notes. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research. I'm curious how you guys would think about like BNB as a comp here. Because BNB actually has been it's kind of associated with Binance, but it's been very strong as an asset, even outside of that. Like
it has. Do you remember if they've changed the fee base? Because I remember at least originally it was like 20% of the profits of Binance goes to buy back BNB.
That's changed.
Right.
It's now a more complex, I would maybe say obfuscated calculation about like, you know, for a while. And I remember when Larry from the block was like on his jihad against Binance or BNB about being like, you're not burning the tokens. You're taking tokens that are in your treasury already and you're sending them to the burn address, which is not obviously the same thing than buying and burning them. So I think like, you know, TBD, I would kind of like reevaluate that. I think the things that are similar with Hyperliquid and BNB is actually the float. Where the float of BNB is pretty concentrated amongst BNB Binance insiders. And I think that same dynamic is playing out with Hyperliquid. Like nobody thinks of BNB as $100 billion asset that's achieved as much as Solana. And I think the reason it's probably the same size is because the float is much more concentrated in BNB than it is for Sol. Well, and I would also say the same for Hyperliquid.
The other thing I would add about BNB, independent of whatever the fee base or the buyback burn, whatever mechanism, I just haven't kept up on that point. But what I do know is the main use case of Bybit or of BNB right now is users who are like VIP tier or alpha users on Binance stake their BNB in Binance, which gives them early access to all tokens and airdrops that are being received for tokens that launch on Binance. And it's this whole kind of like thing of and we've kind of mentioned this a little bit, but like on previous pods, but there is a fee to get listed on Binance. Whatever that fee is negotiated between you and the team. But where that fee usually goes is it's an airdrop to BNB stakers on Binance, alpha users, or I can't remember the other pools, but basically, and someone did some analysis of this, and I saw it on Twitter like months ago. But they said if you were to just stake your BNB and take all the assets that you receive on Binance for your staked BNB on Binance and just sell those tokens immediately, BNB, independent of whatever the price of the token is, has been delivering you 75% a year returns just in the assets that are being delivered to your staked BNB. And so I think that it's not really like a fair comp of like what is Hype used for. Like BNB is a staking asset within Binance that gets you free tokens that you can sell immediately.
Yeah, okay, I'm with you on that. I actually was speaking to Guy from Athena. He tweeted out a little while ago that BNB nailed their token design, and I just pinged him. I was like, "What do you mean about that?" And I didn't realize that you could get something like 75% APY because of this exact mechanism. And it's a little funny to me that the other, who else tried this? Eigenlayer, in a sense, kind of tried. There was like a little bit of a thought to this. Celestia, Cosmos. This was the original Cosmos Atom thesis as well. You could be like an index for airdrops in the Cosmos ecosystem. And the one that actually kind of quietly pulled it off to no loud applause or anything has been Binance.
Well, I mean, look, nobody has decided whether or not Hype could do this or will or will not do this eventually as well. I think one of the paths forward for Hype, and one of the things that I think would be a great kind of positioning in the market would be if they become another launch pad. And I know that there's been assets that have tried to launch on Hype. I think, frankly, they've been launching maybe a little bit too prematurely. Like there isn't the retail adoption. You don't have the users yet. It's really hard to access. It's not even like traded on centralized exchanges. Although I did see Coinbase just announce the Hype perp is going to start trading on Coinbase pretty soon. Assume that there will be centralized asset adoption soon. You could have the same mechanism for Hype, where if you're staking your Hype, one of the assets that you get is any launchpad assets that are being listed on Hype.
Yep.
And the benefit of that is that you would have transparency in what these deals are, which is phenomenal. One thing that we're very much missing in this industry.
Okay, I got a question for you guys. So one of the this is kind of the Ethereum value proposition, and I think Solana has largely followed in the footsteps here. The value proposition of it's like neutral, right? So Ethereum is not going to compete with the apps in its ecosystem, but on the other side of that, the way that I do think that the value accrual of Hype, the token, is just really clear and easy to understand. I generate a bunch of revenue. I buy back the token. There's none of this debate that you get with the other L1s. Is it money? Is it not? It's just very clear and easy to understand. Would you guys like to see, do you think it would be bullish if I could make an argument that, okay, if Hype wants to be valued as an L1, it should let other borrow lend protocols, stablecoin protocols, like stablecoins come in and build around it, be an ecosystem? Or I could make the argument that actually, like, exchanges basically, like Coinbase extracts its pound of flesh from Circle, right, with USDC, and that could actually be another source of revenue for Hype. So, do you think it's bullish from an investing standpoint if it did start to vertically integrate some of these things? Would you like to see it remain totally neutral? How would you look at that from an investor standpoint?
I think it has integrated, like there are third-party money markets that exist on Hyperliquid today, third-party stablecoins, USDC, USDT now. And so I do think like they are building this like permissionless ecosystem, which I guess is like a precursor to being like a real L1. But I think the thing like that makes you an L1 or not is basically the moneyness of your asset. In terms of like the classical description of L1s in crypto, those are the things that people denominate in and can kind of like that denomination builds an ecosystem around it of people that want to access that capital for various different financial services. So I think they're already basically, they are probably tied with ETH in terms of the fees that are being created. Obviously, they're being created in much different ways, like block space versus trading fees. But at the end of the day, I don't think it matters as long as people denominate in your asset and consider it, permissionless and unseizable. And I think that's kind of like maybe like the crypto anarchist, crypto punk idea of why something would be an L1 asset as money.
The reason why Hyperliquid, the app, has been so successful so far is because of the initial airdrop of, I believe, 30% given to people who are using the platform, market makers, traders, whatever. And you can assume that these are, there's a points program, and they've all been kind of conditioned to know that points can convert to tokens eventually. But these are also very, I would say, power law distributed traders, who, at least in the ones that we've talked to, are very much looking at Hyperliquid as a better place, a better venue to trade perps and with high volume. And so you can assume that these are your prime customers, and you've just given them a bunch of hype, which they can use as collateral to trade more on your exchange. And that's what the airdrop presented them with. If you were to look at the exact same, and they still have more airdrops to go, there's still more that's allocated to the community in addition to the allocation to the team. But if you were to assume that part of that community airdrop in their transition to becoming an L1 is going to be for maybe applications or users of applications that are more DeFi in nature, third-party in nature, you think about lending, money markets, think about stable coins, think about AMMs, whatever other kind of use cases you could look to in DeFi. I think that incentivization model is a really interesting one for how you can expand from just a really successful app, a really successful perps exchange, into a really successful L1.
So what do you think about the launchpad for Hyperliquid? Do you think that's an interesting opportunity?
It could be with retail adoption. And once again, I think we haven't gotten to the retail adoption moment yet, because it has been, I don't know if you guys have played around with it, but and obviously haven't been able to, given that we're based in the United States. But if you were to bridge over to Arbitrum and utilize it that way, it's not like a seamless experience. It's not for the faint of heart, and it's definitely a little bit more like advanced level DeFi. And so to do it, you have to be an expert, and or at least it hasn't been as simple as like signing up for a Binance account and staking some BNB to get free tokens.
All right. Should we transition to, I would love to get your guys' thoughts on, I don't know what to call these things, public acquisition vehicles, treasury vehicle, like whatever, companies that are buying crypto assets, obviously. So do you have a good name that you like for these things yet?
Each of them kind of differ in certain ways.
Yeah. So there's one called Metaplanet, which is the Japanese version, and it was the most traded stock in Japan last week. And there's also an Indian one, which I found with a really crazy founder. And it's kind of like this thing where it's like, the coins are in the background, and then you like superimpose the founder in front, and like you kind of give, like you can kind of like animate the coins with the founder. And that's kind of like how it all works from like a retail adoption perspective. The financial mechanisms are such that like you usually do an equity raise, then the thing that you bought goes up, so then you go raise debt, and like the liquidation of the debt is super low, and like if you look at Sailor's liquidation, it's like 30 grand or something, but it needs to stay there for like 4 years to kick in. So like I'm not fully understanding how people are saying that he is going to collapse. I think the mechanisms that the other ones are designed around are probably less robust and so more risky, but can put that aside for a second. I think, I wrote these off personally as just like a sideshow. And one of our LPs who runs a sovereign wealth fund was just like, I was at the MicroStrategy VIP reception, and, these things are real. Like these things are cults, and they're like big, and they're like spreading, and there's going to be one in every country. And the Empire podcast that I think Yano did with, I think one of the old ParaFi guys, but like, they are like incubating these, they're investing in them, they're like getting them out the door. Like these things are just going to buy a shit ton of digital assets. Yes, one of them will blow up or multiple, but that's going to be a long time away. And like, look at the ETF flows yesterday. Like ETH got almost 100, Bitcoin is knocking on the door of $1 billion. You also got these treasury companies buying these things. Like it's like kind of like you need to multiply your expectations for inflows by kind of like 2 if your baseline is just the ETFs, because there's now like this other thing that's happening that really, just to square the circle, is like you can give people who invest in bonds for a living access to crypto-like returns. Yep. And that's just like the real kind of rubber meets the road why these things are popular, is because the whole bond investing audience obviously can't just ape coins.
Well, so, it's even more nuanced than just like giving them access to crypto-like returns. It's literally giving them access to crypto, which is historically, there aren't any bond or debt products that are publicly traded access vehicles. Even Coinbase, which had like a negligible amount of yield on their corporate bonds, have paid that all back. And it's like, okay, well, they don't have any corporate bonds to be able to buy. So like, how do you get access to the industry if the industry is, going full trad right now? And these, acquisition vehicles or treasury products are the only way that the bond market, which, corporate, high yield, sovereign bond, like all of that, municipal, there are tens of, there are trillions of dollars of capital that are out there that are looking to put capital in this ecosystem, are looking for new places to deploy and be diversified, just in the same way that an equity investor is looking to be diversified, as they're looking to make equity investments. If crypto is a real industry, as we all assume that it is and know that it is, like, there is no other place to buy these assets for the people who are controlling bond capital.
Assume crypto is a real industry. Let's work backwards from there.
Well, it's like and bond investors, I mean, there's all these jokes about like equity investors are like the younger guys and like the faster moving, and the bond investors are more of the like, old school kind of like underwriting capabilities versus like what if capabilities. Like equity investors are thinking about this in terms of like, well, what could happen to make this successful? Bond investors are thinking about things of like, what could go wrong for this to not work? Like that's the mentality shift. And so, skews a little bit older, skews a little bit more like curmudgeon-y. And there's a lot of people who are, in the curmudgeon camp who have definitely still questioned whether crypto is a real industry.
Mm-hmm. Do you guys think that, and Vance, to your point, I had similar thoughts. I still think the risk here is, so just backing up for a second, Michael Saylor really structured these in a really interesting way. Where, a lot of this is just straight up equity issuance that he is, that's how he's raising the capital to buy this Bitcoin. But then also a lot of the debt is actually converts. So really the risk there is to the stock, not to like collateral risk that he might have to liquidate his Bitcoin holdings. It's, investors, if there's some kind of, if their covenants don't get met or whatever, they can convert to equity and then dump it. So MicroStrategy, the stock could get crushed, but it's not much liquidation risk. I actually looked at some of the other issuance. So Sol Strategies and DeFi Development Corp are the two Solana ones. There's the Cantor Fitzgerald one, which I believe is 2.5 billion. Trump also just announced DJT, the media holding company for Truth Social, and his other media enterprises announced 2.5 as well. Vince, there was
those are like, so this is where I think we should separate. There's like the Cantor Fitzgerald is not an existing business. It's going public through Cantor Equity, Cantor Equity, something, special purpose vehicle specifically for Bitcoin purchasing. The one that got announced and I think closes today on the 29th is SBET, which is the Joe Lubin takeover. And that's like it's a publicly traded company that was worth like a few $1 million or like $10 million prior to this whole thing. And they just kind of like took this publicly traded handle and like, all right, let's cram $425 million worth of ETH into it. Like that's the other model of doing this, where you take a pre-existing company like MicroStrategy, for instance, which at I think the time when they started buying Bitcoin was making like 100 million in revenue a year, and it was not a very sustainable business and not something that would be able to sustain this. And they kind of use that as a vehicle to run this like basically corporate finance strategy. And I think some of the original bonds with Saylor and MicroStrategy had like recall covenants and he's since paid those off. But yeah, the new thing I think is equity issuance to buy crypto, or if you can get there, successful convertible bond issuance to buy crypto.
It's TradFi crime. They're doing crime.
Do you guys?
It's not crime.
It's not a crime necessarily.
It's crime adjacent.
Do you guys think that this is a failure of regulation? This feels like, do you think this is a failure of regulation or an arbitrage? Like in a world where it was perfectly accessible to buy.
Name one success of regulation. I think we're so far gone on that path that it's like Swiss cheese regulation. It's like, well, you can do that, but yeah, we never thought about that. Like we asked somebody if you wanted to do one of these things, how would you do it? And he's like, oh, yeah, so you just basically buy a bunch of validators and you put them in a company, and that way you can avoid being a qualified investment corporation or whatever it's called?
There's like you have to keep the assets as active assets as opposed to passive investments. And there's a question as to like, okay, if you just take all the SOL or ETH and have it be actively validating, is that an active participation versus yes, there's definitely some like, let's figure out our way to navigate this whole like Investment Company Act question. There's obviously ways of making it happen successfully with MicroStrategy. Assume that this is a bit of a regulatory arb, a bit of like a loophole that I think is open for the time being. But I think the biggest thing is there's just so much latent demand for crypto that this is showcasing how much capital is out there and looking for differentiated ways of like getting diversified or differentiated ways of getting yield. And one of the reasons why it's like crime, or people kind of joke about this, is it's basically the way that Michael Saylor is doing it is he's pricing the bonds kind of below their delta. And so there's like who is the primary buyer and then who is the secondary buyer, and like each one of them is making money along the way. Like that type of a model just kind of further incentivizes this flywheel to keep spinning. And for the time being, it's spinning. It may stop eventually, but I think there's a lot of people who are much closer tied to these markets than we are that with all of these issuances suggest that there's a lot more coming.
Yeah, and it's not crime. It's like that's just being facetious. But I think what really is apparent is like, especially for the bond guys, like how are they supposed to make money? Like is anyone bullish on bonds on like, because like the long bond is kind of where people like speculate and make a ton of money because like that swings the hardest. But like if that's just going to be down only forever, like these guys need to get into like converts. They need to get into like different types of creator, like almost like kind of like Apollo like private credit, but in a public sense. And what Saylor does really well is he just like A, has the cult of personality, but B, he slices and dices Bitcoin volatility really well. Like he's got 3 different types of bonds you can buy depending on what your risk tolerance is.
Like AAA corporate, I don't know. Like what would be Apple bond yield? Anyone take a guess?
I think it's lower than the U.S. Treasury. That would be my guess.
It's slightly higher, but it's literally a bond that matures in 2060, and it's a 5.49% yield. So you're talking about, I guess that is a 25-year. So it might be right at, I can't remember where the 30-year is, but it is probably
2060. So it's 35. It's like that's a 35-year bond.
35 years, but yeah. So there's not like a direct, but like right in line with the U.S. government.
Yeah.
So do you want to buy the risk-free rate, which is the U.S. government, or do you want to buy Apple credit, like which is maybe you're getting a couple bips here or there? Like there's not many places to get exposure to other industries in the bond market, especially with higher yield. And yeah, it's just a lot more capital coming, I think, is the overarching sentiment.
The other thing I would say about bonds is like, I feel like there was this like end of history moment for the bond universe where it was just like the rates keep going down and we keep making money and the government keeps buying the bonds and we have someone to sell them to forever. And now it's like that is gone. And yesterday I was checking Microsoft bonds. Microsoft was trading, I don't know where it is today, but it was below the US Treasury yield. And so it's like, wait, Microsoft is more creditworthy than the US government. And so like, you kind of like look at that and then you do like a really big zoom out, which is like at a certain point, like if you're selling $10 trillion of US debt per year, like Scott Bessent needs to do this year, and then Sam Altman is trying to figure out how he can get $1 trillion into a compute cluster, like the quantum of capital like actually like starts to like push up against each other. And like, I don't know, do you do the Stargate cluster bond or do you do the US Treasury bond? Like, I think it's like a legitimate tough call, especially if there's any like kind of like funny, interesting convert stuff on the Stargate, Sam Altman side. So like, stable coins are going to buy bonds, but like there's going to be all these other things that kind of manifest. And the bond market is probably more interesting than it has been in quite some time.
Yeah. Okay. So last question on this is I'm curious what you guys, I mean, it's obviously not perfect, but the maybe closest analog to these things would be like the Grayscale trusts from last cycle. Obviously one of those didn't, I mean, completely different structure, there was real liquidation risk there. I think the big open question to me is how are these things going to be structured? If the financing for these crypto purchases are equity or converts, that feels not super risky to me. The risk would be, right, if everyone just say, hey, MicroStrategy ran this playbook and that's totally fine. And then they, as you get longer and longer in the tooth on this trend, you get stricter covenants. That would
Look,
be the risk.
I think, and we're not investors in any of these products, nor backers or anything official. We're just fans. But what I would say is the major difference between these products, MicroStrategy, SBET, or Sol Strategies, is that versus any of the Grayscale products is the first Grayscale products that had retail adoption capabilities were the Bitcoin and ETH ETFs once they converted. And you had to basically be an accredited investor. You had to have an account at UBS to be able to get access to GBTC prior to actually being able to have an ETF in your brokerage account. And so it's like a higher bar. And so that's just limiting in terms of who has access to these products. But I think you can trade, all the other listed names on Robinhood. And so this is going to give sort of a levered asset perspective to a retail audience that probably isn't going to be looking at the convertible bonds of MicroStrategy, but maybe buying, strategy shares in Robinhood and looking at this as they've raised $1 billion and buy $1 billion worth of Bitcoin. Maybe that adds 1.7 billion to the market cap because it has been trading a premium to NAV. And based off of the way the financial engineering works, it is more beneficial to own that historically than just the underlying asset.
All right. Well, definitely interesting to see how it plays out here. I think we've seen, we've seen these vehicles for obviously Bitcoin, now Ethereum, between Consensus and I'm blanking on the name, that Japanese Sharplink Gaming, and then a couple of Solana ones, DeFi Development Corp, Sol Strategies, and yeah, I mean, maybe only a matter of time until we start to see Hyperliquid or some of these other assets as well, but we shall see. All right, we probably got time for one more story. Do you guys want to talk about stable coins and this banks exploring a joint venture? Or do you want to talk about, what was the...
we can call it there. It's been a day. Banks getting into stable coins.
All right.
It's like when Goldman was launching their Bitcoin trading desk. It was like, you guys still doing that? No.
The only thing worth noting, I'd say, is BlackRock is interested in buying 10% of Circle
at the IPO.
At the IPO, which I'm sure that there's some structuring to it. I think that it'll be really interesting to see where Circle price is. The rumors are much higher than basically expected. Maybe that showcases some of the demand for this industry, just as we were talking about. But it'll be very interesting to see. And there were a lot of rumors about acquisition versus IPO, and bankers will tell you day one, first thing you do is run a parallel process. I wouldn't be surprised if there's an 11th hour kind of all right, we've sold announcement.
I think the tell on that is they're going public on the New York Stock Exchange.
Right.
The very well respected New York Stock Exchange, not the NASDAQ.
Yep.
I don't know. I think the NASDAQ was like, we're not going to be your fucking negotiating tool.
No.
I've got a question for you guys. What do you think about Kobe's new ICO platform, Sonar? So it looks like Plasma is the first. So obviously Kobe's been building this crowdfunding platform, Echo. There have been a lot of, interesting private deals. There's a little bit of a, you can follow your favorite, sort of angel investors. It's a little bit, I don't know if gamified is the right word, but the idea is to democratize access. And some protocols like Mega ETH, I think, have used Echo, very effectively, and community building, getting your asset in the hands of your early users, all that stuff. So Kobe also launched Sonar, which is the ICO, sort of launch pad, maybe a slightly competitive project with like CoinList or something like that. And it looks like Plasma is the first one to go. So curious what you guys think about this. Is this the beginning of a longer trend?
I think it is. like, I think they probably originally set out to disrupt venture capitalists, but I think what they've really disrupted is like airdrops. And I've found that like the more and more evidence that we have is like airdrops are kind of cancerous. And it's not about, giving the community less than 50% or whatever. It's more about like having people with zero cost basis is a real issue.
Yeah.
And with liquid tokens.
With liquid tokens. So like I'm all for having more distribution, albeit with people putting more skin in the game. So I think it's a fundamentally positive trajectory for the industry. And, I'm super excited for the Plasma ICO. And yeah, I mean, it's just cool to see some of the best teams coming together to launch something that, hopefully the distribution is a little bit more egalitarian than it usually is.
And just to piggyback, I mean, we've had this conversation with a bunch of our founders recently, but then also over the last few months is 90% of the people that you airdrop tokens to will sell within 2 to 3 days, all of their tokens. And, like making the community upset. It's like the random nondescript anonymous person on Discord who is mad that they didn't get as big of an airdrop because they were early to something, who are just there with the 100% purpose of just airdrop farming and then selling, is not the community that you need to build. You need to have people who are skin in the game, who are locked up. And I think that the world is shifting towards that. Whether that means that you're participating as a staker or a validator or contributing to the network, and that's how you earn tokens, or whether you're putting up a little bit of capital. And in the case of Plasma, it's the same terms as the last round from Founders Fund. So you're investing alongside at the same terms. And I think that model will probably become a dominant model in lieu of airdrops. Totally agree.
Yeah, I agree. You can't give stuff to people for free and expect them to value it.
That is, the simplest. It's like Occam's razor.
Yeah, totally. It's
you
just
don't
not
want to
a
be in
doable
the business of giving tokens away for free.
Yeah. When Jason and I first started doing it, like in the super early days of Blockworks, we were trying to figure out how to price tickets. And we started off charging people nothing. This was when they were after work happy hours when we,
Dude, I remember the Chicago one in 2019. Michael and I were there. We didn't know each other yet, but I think that was free. I don't think we paid.
Yeah, so we started really cheap, literally $25 or $50.
Yeah. I actually do remember buying that.
And actually, the inspiration was we listened to How I Built This on what's that, like DTC glasses company, Warby Parker, where they initially wanted to charge something like $30 for glasses, and a marketing professor said no one's going to believe that they're quality. So for years we just doubled the price of the tickets until we actually found the equilibrium at the top. But it wasn't even slightly more difficult to sell or neutral. It actually became easier to sell tickets at a certain point, because it's like if you've ever been on Instagram and you get ads for clothes and it's way cheaper than you think it should be, and you're like, I'm not trusting that.
This may be fake.
Yeah, it's probably fake.
Right.
And there's a lot of interesting studies about how people value education in countries that give it away for free. So I just think in general, you can't.
I can't remember the exact term in economics, but it's like a Veblen good or a Giffen good. One of them is like the demand goes up as price goes up. The other one is like perceived quality goes up as price goes up.
Veblen is price goes up, it gets more valuable.
Right. And so that I think is it's true. There's a curve to it. Too expensive is still too expensive.
Yeah, totally. Yeah, you'll max out at some point. All right, fellas. I appreciate you. This was a fun one. See you next week.
Good job.
Bye, guys.